Hey, what's going on, everyone? This is Tyler Coates, along with Joe Saz and Fibbo Swanee. We are the Honest Analysts, coming to you at the normal time, Thursday evening, 7:30 p.m. Eastern Standard Time. And going to be plenty to talk about today. Joe's going to have to go a little bit early, so he'll be leading us off with the analysis. And before we take the time to get into that, I did want to just take a minute to talk about everything going on in the world right now, which is something that tend to stay away from, as this is mainly just a show about technical analysis, and that's what I will be relying on 99% of the time to determine my investments and my positions, and then there's going to be about 1% of the time or so where I am going to be very much putting fundamentals ahead of the technicals, and now is starting to be one of those times where I think a lot is changing, a lot is happening, and I want to just be sure to touch on that here before we dive into the charts. So before getting into that, how are you guys doing? Joe, it's good to see you, and Fibbo, looking good over there.
Great to see you.
Yeah, doing well. Doing well.
Well, I'm
Just
glad.
chilling out here in Kentucky.
Well, I'm glad to hear it. Yeah, I'm not sure if you guys all really have much to say about this. If you do, please chime in. But I did just want to make, I guess, my stance clear, and I just want to share what I've been seeing and what my perspective is, and trying to keep it as unpolitical as possible. And I am very unhappy with what I'm seeing from the censorship from the major media outlets, talking Twitter, Facebook, YouTube, censoring the acting president of the United States is something that really bothers me and is not sitting well with me at all in terms of how they could have the power to do that in today's world, and as well as what the repercussions may be, because Trump is definitely a love him or hate him kind of guy, and whether or not you want to admit, there's a lot of people out there that absolutely love him and what he stands for, and I think that could lead to some some situations where I'm going to want to be doing my best to just be prepared for anything that could happen. I was at the bank recently, withdrawing money from the bank, not feeling comfortable about an environment where people are very scared and or thinking about protecting themselves, their families, and their wealth. And it was a very, very uncomfortable experience. They treated me like I was trying to rob the place almost. How nervous they were, how many questions they were asking me. It really did not make me feel good. So I've been talking to my friends and family and just making sure that they are all prepared and not taking unnecessary risks. And I guess that is really the main point of this spiel here at the top of the hour is anybody that follows along here is, a friend by association, I guess I could say. And anybody that is in this space and still in this space, I think it's because you really believe in Bitcoin, and you really distrust the current system and the current banking industry. And what we've been seeing lately has really caused me to reconsider what the next crash is going to look like. I've been thinking all along that in my lifetime, I'm going to be here to witness the next Great Depression, and I have been expecting that to just be in confluence with a big crash in the stock market, which is clearly in a bubble. Anybody looks at a chart can see, and I think a lot of us have been expecting that to correct or crash for a while now. And after watching it sustain and create new all-time highs amidst a COVID lockdown and amidst the protests and riots that were going on across the country, and now looking around my town and seeing all of the mom and pop businesses that have been shut down after we went on a second lockdown here about a month ago or so, and now places just businesses aren't able to make it through when they didn't seem to have much problem making it through the 2000 crash, the '08 crash. So it's kind of made me start to realize that it doesn't really matter if the stock market's at an all-time high, if all of these businesses are closing down and going out of business, and they're censoring the president of the United States, and people are standing up and rioting about that. Maybe the stock market price isn't going to be the best indication of when the next real fallout occurs. And I'm of the belief that we're at the first stages of that right now, and doing everything that I can to protect myself and my family. And just want to say anybody else out there in America to do your best to try to find some sort of news source that is going to be objective. It seems like they have not only censored Trump himself, but many people who are supporting him or his agenda. So it makes it very difficult today to find news from a objective source, and that is one of the things that bothers me most. So I think that right now is as good a time as any to do your best to stay informed, and that knowledge could potentially be it definitely is as valuable as anything else. And it's easy to get wrapped up in the price of Bitcoin when it's really making big moves. But that's when it's also really important not to let yourself get your head stuck in the sand and get blinded to what else may be going on in the world, and what and how that actually may be impacting the current price of Bitcoin. So appreciate you guys letting me take a moment to just share my thoughts there. And if either of you have any opinions that you want to chime in before we send it to Joe for some charts, that'd be great.
Yeah, no, no, I appreciate your comments. I always like to know what you're thinking. The couple of things stood out of what you said. First of all, why did the bank give you trouble getting your own money out, regardless of what you're doing it for? Who gives a shit? It's your money. So I don't understand that.
I can't even tell you. I was like looking around. So I'm in like an old West town that's like an old gold mining town, basically. And I'm looking around at all these old buildings that were still here in the Old West. And I'm just thinking to myself, what if a cowboy just 100 years ago isn't that long, just 100 years ago, a cowboy walks into this bank that would have been right down the street and asked to withdraw his money. If they would have asked him one question, that bank would have been out of business, very shortly. It's
Well,
like,
so I mean, you can take your money and put it other places. I mean, I would think they would want to treat you nice, so you would actually bring it back so they can slice it into a million pieces and lend it out all over the world.
I can't even tell you how uncomfortable and weird it was when she specifically asked me, "What are you doing with this money?"
I would have said, "Up yours."
Oh yeah, I did my best to avoid. I was, just as
You were probably shocked that she asked it.
And I was. And then they call over somebody else to come and be like, "Oh yeah, we were looking at your records and this doesn't fit in with your spending records." Like basically what they were telling me was like, "Yeah, we weren't expecting you to come and withdraw all this money right now." It was the way that they acted, like I'm as a former poker player, I'm always reading people, and I think I'm very good at it. And that was something that scared me more than anything else. That I can't find very objective news out there, but I know that it sounded like the call came down the line there or something. And I'm not trying to incite fear or nothing like this. I'm just trying to share my experience that you're absolutely right. There's no way that they should have any questions. And I don't think that my experience was unique per se. I think that that's something that would be that's going on pretty commonly right now for anybody that's out there trying to withdraw cash because they have really done a good job of moving this into an electronic cashing system. And I mean, the bottom line is, look at what went short, the shortage that we had in the first lockdown. Whatever was, there was a shortage in that first lockdown. That's what I'm paying very close attention to see, like that's where the real demand is and a real supply shortage in the world. Not just toilet paper, change. There's a national change shortage in America. That's another way to say there's a national money shortage after they printed a bunch of new money. They came out and all the places around here said that there's a change shortage. So it's something that the economy was tested during that lockdown, and a lot of things held up, but some things were shown to have a shortage. And I think that they are very much realizing that, and I'm not wanting to be the last one in line or even the fifth out of 10th. And that's why I'm wanting to share this right now, because it's always better to be safe than sorry. If I hope that I'm wrong, I really, really, truly do. I can always go back and deposit my money at that bank or a new one tomorrow. Whenever things become into a safer environment, I'll be more than happy to do that, and I won't pay any penalty to do so. And that's the bottom line: is they're paying nothing. There's a lot of risk to have money in a bank, and there is no reward. So I just would ask people to really, take account for where their emergency funds are. And after the price of Bitcoin has gone like this, you guys better make sure that you do have an emergency fund that's in place. And if you're going to trust with the bank, then that's fine. But if you don't have one that's in place right now, and you're looking at the price of Bitcoin having gone up this much, then it's time to sell a little Bitcoin and establish your emergency fund. 6 to 12 months living expenses has been the historical benchmark for what you need to survive the rainy months. And those that have had 6 to 12 months expenses stocked away, have generally always been able to survive and figure it out one way or another. And that is a frighteningly small percentage of people at the end of the day. So encouraging anybody who isn't in a situation where they have 6 to 12 months living expenses set aside in an unvolatile asset, and they're comfortable with where it is set aside, to really, really, really take a close look at why that isn't the case, and if that is something that you're going to want to do sooner rather than later.
Yeah, and the other thing was I had a lot of people talk about the stock market being a bubble and Bitcoin being a bubble and all this other kind of stuff, and I tweeted it out the other day where I showed Tesla on a chart, and it was already basically 10 fibs above the extension, which is just absolutely enormous on the stock itself, which I would actually classify as a bubble because it was so far up there. So when you take an extension and like when you look at the 127%, the 27%, and then you go to the 200, well, this was at 1,000% above, so it was insane. But then I looked at Bitcoin and I did the same chart, and as Bitcoin made a new high, if you want the equivalent, if you went 10 fibs out, you'd have to have Bitcoin at $175,000 right now to be a bubble. So that tells me right there that the stock market is just so dangerous right now, because if there is going to be a run on cash, I mean, you got to go where it's at, and that is one of the spots where it's at. So people might not be running to the banks yet, but they could basically cash in on some of those bubble areas to get those living expenses for possibility of disaster. So when people say Bitcoin's a bubble, no, it's not even close. Is it up and it is extended? Yeah, absolutely. And we're up in an area that could be a lot of selling interest, and it could correct pretty hard, but it's nowhere near bubble status, at least from what I can see. So that was the two things that I kind of took from what you were saying. Getting talked at the bank and the stock market being kind of bubblish.
Well, I appreciate your input, and we'll send it on over to Joe for any of his thoughts and some of his charts. I just see a comment from Bernoulli, who was partying at the beach house with us last weekend. Shout out to Bernoulli, and he says that he had a similar, but sounds like much worse problem where he tried to pull out some cash and they flat out refused to give him the cash. And Agartha Asgard had his money frozen after selling some crypto. And it looks like they just made sure that he paid the taxes on that, which of course you want to pay the taxes, but there's no reason they should be freezing your money to make sure that you pay the taxes. So
cash out in other ways if possible.
Yeah, I don't think that my experience was uncommon, and I'll tell you what, as I sat there and I had to wait for him to bring me the money, I was it really, I was wondering what the percentages were that they were actually going to come out with the cash. And hearing Bernoulli say that they flat out refused, that doesn't surprise me. If you can share any more information in the chat, I'd be interested to hear. Did you end up getting it? What did you have to do? What were their reasons for refusing? Anything along those lines, I'd be interested. And on over to Smoke and Joe. How's it going over there?
Things are good, my friend. Things are good. To comment on everything you said in a nutshell, I think censorship kind of went a couple levels above what we all would have expected. You know, New York City canceling all contracts, bank account stuff, social media stuff. It is a lover. I'm not political. I am willing to raise my weapon as a patriot of the United States, not in the name of any one man, in the name of the fucking founding fathers who were gangster motherfuckers and made this a beautiful land for as long as they could. But that's, my thoughts are, this is kind of a sign of end times, if anything. I mean, am I mad? Not really. Does it show what the powers can do? They can do terrible things to a president. So what does that mean that they will and can and will do to you? You're not jack shit. Me, you, Fibbo, we're all fucking pieces. We're numbers to them. So I'm ready to raise my weapon. Straight the fuck up. This was a big sign to say that, even the president's a fucking number to us, and media of all different fucking levels, social, TV, internet fucking articles and shit. It really all kind of funnels down to one source of information. And that's basically people that want you to see the world the way they want you to see the world. It's Operation Mockingbird is in full swing. CIA op that was banned a while back and brought back into play a number of years ago, maybe a decade. So not even conspiracy theory shit. I'm just with you 100%. Think it's a really bad precedent to set, and we all need to realize that we're fucking nothing to them. So are their warriors, probably worth very little to them too. So maybe when this all goes down, we'll have a fighting chance. But I do expect a very dark future ahead of us. But enough about my fucking black jacket shit.
Well, just before you get into the charts, let me give my as somebody who's always optimistic, because that's what life has showed me, is that the biggest challenges always provide the biggest learning opportunities, and that they always precede the the best times that I couldn't have even imagined beforehand. And I do think that I really do think that this is the beginning of the end of the old times, which the old times is exactly what all of us are wanting to escape. And what I've read about from it's like I don't know, an old proverb or saying or something, is that it'll take longer and longer. It'll take way longer than you could ever imagine to happen, and then when it happens, it'll happen in the blink of an eye. And a lot, like, it's how many gold bugs have lost their breath 10 years ago saying that something was going to happen, and the longer it goes on without happening, according to Austrian economics, the worse it's going to get once it actually does happen. So as soon as there is some sort of the sooner that there is a fallout, the quicker we'll be able to pick up the pieces and actually move on. And I really appreciate what you said, that that you're willing to fight for the founding fathers and what this country stands for. war. And there's a lot of people talking about leaving the country, and that's something that's reasonable to be considering at this time. But I'm personally not seeing anywhere better in the world that stands by the values that I live my life by, other than certain places that are still in America. And I think that the amount of people that are standing up and really uniting around the ideals that are written in the Constitution, it really makes me very, very proud to be an American, because for a long time, I didn't think that there would be anything that would cause us to actually stand up for something. And we've often talked about the idea of like, what if there was a draft in today, like nobody would go. And this is almost like an anti-draft, where all the people that you would never volunteer, be even think about draft to the Army, they're right now standing up for the country and what this country believes in, opposed to volunteering to go fight a war somewhere else. That I am really proud of the vigor and the spirit that the Americans have shown, which no other country in the world has shown in response to the lockdowns and the government control that has happened. So I'm very very proud to be an American, and I do think that maybe it's going to get darker before it gets better, but that it's just been waiting to happen, and the sooner that it happens, the quicker we can move on and really move into the future that we've been wanting to build, anybody that's in this space and still in this space. So that's my opinion, and thanks again, Joe, for your perspective.
Yeah, thank you for giving me the time. But we all know I'm a pretty not beat around the bush kind of guy when this is a dark world. So we'll move on. I always think about that saying: the only thing necessary for the triumph of evil is for the absence of good men, or something. For good men to do nothing. So just remember that, everybody. But let's jump into some charts and have a little bit of fun before I have to scooch on out. So you guys are gonna love this, man. This was one hell of a day. Oh my Lanta. We freaking fell into a net, which is actually a really good thing, right? But we had a massive convergence of signals in this dump. I wish I could have been, you guys could have seen this. It was crazy action. I mean, we were dumping into gold mine. Actually, this is 2.5 to 5% band. This was like the first gold mine that lit. This is actually a ruby mine, I should say. This is the first ruby mine candle that I've ever seen broken. This one right here, the bottom of this horizontal on the ruby mine. You know what? This is going to be funny if it wasn't the ruby mine. It does appear to be the ruby mine. Yeah. So the bottom of that horizontal was ultimately broken just ever so slightly. As you can see, that dotted line right up in there, just above that blue horizontal. But that was when I was really interested in these trades, and we had just consistent ruby mine support, lower lows, ruby mine, gold mine. As we came out, of course, that support had been damaged. Bulls were on their heels. But we came back down for another swoop, and the bulls just fucking held their ground straight up. They did a pretty good damn job doing it, and ultimately bottomed out. We got a confirmation bottom. Like, this was a very stressful period of time. I don't even know how long I was stressed. It's like time moves by so fast now. But I've been ignoring, as I mentioned a long time ago, I'm going to continue to ignore short signals for the most part, even though they've been pretty damn good. I did add leverage on something like this. This was a beautiful bottom to me as well, being that the horizontal range, of this low of this area was producing gold mine results. And that meant that buyers were now chasing the book. Now, that also meant all these sell signals were sellers chasing the book. So it's a ton of dynamic behavior going on. Sellers did run price down to create a price ceiling, which did hold temporarily, which I did say that this was going to break through. Notice that during all this action, you can see down here, let me do this. You can see how the perps were flipping in and out of, bid dominance, ask dominance, heavy, same with aggregated spot markets. You can just see that the market was in a state of complete disarray for the past maybe even couple weeks. And interestingly enough, as we near all-time highs, we get bullish. As we get lower and lower. There was a little bit of bearish action or bullish action showing up at the bottom, which is great. But then just off a small bounce, the bid-ask spread went heavy in favor of the bears. So this has been a really psychologically damaging dump. And we're going to be like, from top to bottom, we got our fucking first 30% drop. I mean, from top to bottom, we're talking 28.x%. So we got our first one in the bull market and people lost their fucking shit. It was crazy. I mean, I saw so many sells running through the book. And it was great to see buyers sit there and eat it. Of course, it would have been great if they would have eaten it off the first support, but I'm of the opinion institutions are not going to save the price. They're going to catch it at its absolute lowest point. And they probably have some limit orders and they're probably prepared to do some market buys. So I don't expect them to fucking prevent anything from going 30%, 10%, the things that I heard people saying, oh, I'm only expecting small pullbacks because of institutional investments and all that shit. No, they're not going to fucking save your ass. They're not here to save your ass. They're here to fucking make money, and they're going to buy the lowest point that they possibly can. This was it. The sellers in their FOMO fucking mentality sold so badly into this, but they were so stacked so heavily. Everyone, the bulls, I'm not singling anyone out here. The bulls were stacked so heavily. They bought us out of this range, created some confidence, and over the past couple days have continued to instill confidence in this long-term uptrend, which does happen to be vertical. So hence the fear of a pullback, but it's been great. We do have what scared me a little bit are the trend bias signals showing up on the top side. So in order for us to really clear the fucking storm, we need to get, in my eyes, I need this to not look like a bull trap, because right now this is looking exactly like a bull trap. I need this to make a new high. Otherwise, I'm going to be really skeptical about the trade that I'm in right now, which is very heavily in the money. But I do not want to create a bear bull trap here, and maybe carry out some sort of hyperwave fractal, as you mentioned before. Maybe even not even get to a straight phase 4 with a higher high. I don't know, but and I'm not the pro here. You are. But I'm just saying this daily is fucking me up a little bit because I don't want to see a bull trap. And I'm not happy that I removed the canary mine because I only wanted to see high sensitivity stuff. And I'm pretty upset that we got some trend bias signals showing up as we were able to pull our way back into 40K. That just fucking has the look and feel and the touch of a fucking bull trap. Now,
I'm not. When you say a feel of a bull trap, is there certain things that you're looking for that could possibly make it a bull trap?
Yeah, this is one simple thing, a lower high. That is all. Like, if we can break this high, then I'm happy. I'm saying bull trap, no problems. We cleaned house. If this on the daily starts to roll over, I'm bailing. I'm not going to sit around and let this thing, possibly have micro bubbled in the middle of of an economic crisis, and then I'm not going to be the last one out. So this is a really important thing to me. I mean, this bull trap formation is something I think absolutely everyone should know or is probably familiar with. I mean, here's a clean one over here, a pullback, a bull trap, and then ultimately we broke contact with the previous high, but we didn't break the higher high. Maybe a tiny wick up here, but if you want to play wicks, let's play wicks, right? So that led us into a pretty.
When was that time frame?
That was the 14K high at the time. That was around July or whatever, June, July. Okay. And even this all-time high, we kind of had a weird structure here. I mean, obviously this isn't a clean bull trap on the daily on Coinbase. What you'd want is a higher high up here and then a lower high down here, probably a body close up here, to be honest. So this isn't a prime example, but this is what I'm scared of. Okay, I'm not necessarily bearish. I want to clean this up immediately. Now that we've gotten our feet back beneath us after these wild swings, the 30%, 28 point whatever percent swing to the downside just over the course of a couple days, really. We've done a lot of work to regain strength. Now the question then goes to, are bears going to let off easy? Are they going to be pulling liquidity? Are they going to say, you know, it's time for us to acknowledge that this is a bull market? Or are they going to be stubborn and or not stubborn? Are they going to be practical by their standards and hold their ground? If that's the case, then, you know, we got to be prepared for a little bit of a pullback, and probably back to, probably we got to see how 30K holds again, you know, and I do not want to deal with that. So if we start to round out, then I'm probably going to be the first one out. But so far, I'm trusting that we got some trend bias signals here. I'm trusting that the sell side liquidity is there for grabs. I think the demand is very high. So I really don't want to short this market, but I really am considering taking profit on this trade and walking away till the next one.
Okay.
But yeah, happy to see bulls getting bullish as we near all-time highs. We are diminishing a little bit, starting to tighten out. It might be a good time to think about, you know, the exit strategy, but at least short term, you know, you can always get back into a bull trend. And if you caught, you know, if I caught this horizontal line, if I get out up here and I get back in up here, you know, I'm not gonna lose any sleep. So I'm just thinking about that stuff as we go along. It's very rare that we get trend bias bands on the sell side. We got confluent bands up there. We have a lot of stuff chasing the book. So sellers are still really, really active right now. And buyers, I think, need a little bit of time to heal. 3 days is about as much time as it takes. And we have done quite a recovery. But now it's, you know, if the bears take control again, then it's going to be probably a test of these lows again. And at which point I'd rather set up a new position, take profit, set up a new position, XYZ. And honestly, at this point, hope that our lower low is much higher, you know, probably something along this range, that we do get a lower low and then take off. But, you know, it's Bitcoin is its own beast, you know, so that's why I do look forward to watching back and seeing your guys' thoughts on the long-term view, because this is not my area of expertise, but I am in more of what I consider a swing trade. This is the third day that I'm in a trade after adding leverage the second. So to me, this is a long trade. I don't like it.
Yeah, no. The reason I brought that up, because one of the things that put me at ease a little bit is, of course, it's definitely could be a bull trap because we haven't made a new high yet. But one of the things I look for is a switch on my RSI zone on the 4 hour. Since it moved back into the bullish zone, that kind of eases me back a little bit. Not that it still could be a bull trap, but given that the market's rallied up and it's not, if it was still in the 4 hour bear zone, getting this close up to, you know, where a new high would be made, then I'd be really, really concerned. But given that we're into a new bull zone, just from what I look at, it eases me a little bit that it's not as bad as it could be. But yes, you always got to be cautious that this thing could break down pretty quickly. But that's the one thing that I look at that kind of ease me off of being a really, really strong bull trap at this point in time. But we'll find out in a few days, right?
I'm happy to hear that. You know, I definitely want to be a moon boy right now. I think this is the market. You know, I think there's a lot going on, you know, institutional and all that, you know,
yeah, but you're playing caution for what you do, and that makes sense.
Yeah, exactly. So that's all. That's, you know, one thing. But we also have the potential situation going on with Tether. Tether FUD equates to Exodus, which equates to pump. So I want to put that on the table, you know, but
what did you say, Saw?
We
couldn't hear you.
What are you talking about with Tether? What's that?
January 15th document production. Basically, they were putting on a timeline after delaying and stalling for so long that they have to produce documents by January 15th. I'm not expecting them to be, you know, just hellish documents or anything, but if they happen to have a negative spin, you know, like what happened in October 25th, 2019, was it? We went vertical from 7,000 to 10,500 on the arrest of the crypto capital CEO, you know, which their parent company is Ifinex, also the parent company of Tether and Bitfinex. So
who's making them? You said they're being made to show these documents. Who's making
the New York Attorney General. They're under investigation by the New York Attorney General. Been so for about a year and change now, but they've been stalling like motherfuckers, man. And I know their law firm. Their law firm's kind of a B law firm because the biggest money law firms are not going to take their case because they'll probably lose. But you know, Tether is one of the things that an exodus is bullish for Bitcoin. Certainly short term. It's vertical short term bullish for Bitcoin. So tomorrow's an important day. Tonight, tomorrow evening, most likely. That's probably when I'm gonna start drinking coffee this late. But yeah, you know, I don't want to delaying installing, not due process. If Tether is, you know, anyways, I don't have to get into this, and I do have to go here and prepare for a meeting at 8:30. But we can definitely elaborate on this another time. But you know, the fact that 30K held so well above 28K, which was our last violent breakdown, like a really nasty breakdown, that's good, you know. But sellers chasing the book, they are pulling liquidity. We are making our way through what aren't super strong static sell side orders. So, you know, this could be exactly what bulls wanted, and this could be a bear trap, and bears even selling into this and maybe bringing us back to test that low could be a bear trap as well. I just want to prepare for any eventuality. But yeah, things are looking good for now, and then I'll have to tune in later to watch you guys. I can spare another minute or two and answer any questions you had, though.
Well, I was just going to ask if you had a source on that Tether stuff, send it my way. I'm not seeing anything just on the first page of Google, other than it's expected within weeks from back in December. So if you could send that my way, I'd appreciate it. We'll give the chat a look to see if there are any questions there. Looks like you covered it pretty well, and I think we're both in agreement that this is kind of that spot where it can get tempting to buy if you didn't buy the dip, and that's generally going to be where the guys that did are going to be actually looking to take some profit, and this is definitely a critical inflection point where it could easily be a bull trap.
You know, let me say it like this though. It's going to take balls to buy the dips and boobs, whatever you want to fucking say. But it's going to take guts to buy the dips. These are going to be swings. They're going to be messy. They're going to be nasty. You got to have good money management. Be prepared. This is a bull market. We know that there were 9 of these last time, and people are fucking losing their minds. You know what I'm saying? Like, get used to it. This is Bitcoin, you know, and if you can't trade this, then don't stay away unless you have a damn good stop strategy, because that's probably going to save you more than any of your money making strategies if you're playing in a choppy market like this and you don't have a ton of experience. So I just don't want people to think like, oh, you know, Bitcoin shit the bed all of a sudden. These are what we had 9 of. We ran through this 10 times now. You know what I'm saying? We've gone over this. So, you know, people, don't lose your minds. Bitcoin's going to have little profit take zones, sell-offs, FOMO sell-offs, FUD stuff. But this is a bull market until otherwise noted. Hopefully we break that high.
Agreed. And thanks again for your input, and I'll let you get going. I know you got a meeting coming up, so thanks again. And yeah, would just encourage everybody to take a close look at their recent results and their approach, and to see if that lines up with their expectations. I feel like I think I know that a lot of people have just been waiting around throughout the bear market, feeling like they're just going to make a bunch of easy money once it finally takes off into a bull market, and all you're going to do is just buy the dip and make all of the money. And now maybe you've been seeing that maybe it's not quite as easy to buy the dip as you were thinking, and that is definitely something that I would say for sure is that you know, buying into one dip and making a little bit of money is basically irrelevant if you are going to discount you know, all the dips that you tried to buy into where you lost money. And it's very, very important to keep diligent records so that you know how you've been doing. If your strategy is to buy the dip and you don't really have anything too objective, or whatever the case may be, even if you do have something very objective, you need to know what is your strike rate, how often are you making money, how often are you losing money, what's your risk reward. And yeah, I agree very much, Joe, that buying the dip is not for anyone that doesn't know exactly what they're doing. And would just make sure that everybody out there is taking the time to really think about their approach, because there's a lot of money to be made in a Bitcoin bull market. And
Oh yeah.
that means that there's a lot of money to be lost by people who are on the wrong side of that.
And I'll say with my final note, there's a lot of money to be made in a bull market by doing absolutely fucking nothing, you know? So don't stress yourself out that I had X amount of coins back then and I have less now. Let the market work for you. You know what a bull market looks like. You know what a freaking, bear market looks like, hopefully by now. Obviously tune in for more information. We're going to be constantly here for you guys. But, I just want to say thank you so much for having me, guys. And I appreciate your forgiveness of my, not being there in Florida, which I didn't get confirmation of that forgiveness yet. But, and thank you for giving me the time to bone out early here. But I love you both. It's really great to see you all. And Tyler, can't wait to have a little chat with you. And Fibbo, I can't wait to look back and see what your long-term outlook is. Because, man, it's getting weird up here. And I hope to see some good news. Being a scalper, I'm not happy sitting in a trade for this long. So love you guys.
All right.
Take care.
Later,
And
man.
thank you everyone for tuning in. Thank you for all the love and support. I really appreciate everyone. And I'll leave you guys in the warm hands of these two geniuses. So thank you both, and be seeing you soon.
Cheers. Love you too, buddy.
All right.
Cheers.
Later.
Bye.
All right. Can I go to my charts? No, I'm just teasing.
waiting for.
No, let's see here. Let me pull up my screen here. Yeah, one of the things that Joe was talking about was, buying the dips and those kind of things, and I know it's tough, but it's like you said, you got to have, I guess, experience, know what you're doing, have a plan, stick to the plan. It's all about risk management. If you do buy the dip and it goes against you, you have to have the discipline on the out, all those kind of things. But I'm gonna go through all the different time frames of what I've been doing since I haven't been on a call for a while here. So I'm just gonna kind of go through different things. I'm gonna start out on the hourly because basically the following the fibs and following what I've been doing, I've been buying the dips and they've been working like a freaking charm. So it doesn't always happen this way, but it's working pretty well. Starting with the hourly, I got some arrows on here just to point out some different things. And first of all, back on the 10th, January 10th, we broke into the bearish zone right here on the RSI. There was a period over period positive change on the ADX going up at that time, and the bears are in control. So this is the starting point for the move to the downside. But a couple of things, I was looking at the previous levels here, and first of all, when this goes into a bear zone for me, one of the things that I look for that has to be validated on that is 3 closes below the 38% level of the previous threshold, and that was at 38,114. So when this actually clicked into the zone, we were still up here, and the market worked its way down. But the interesting thing is right at this point at 38,000, we got the candle right here, the third close, and the fourth close was this wick all the way down and back up. So at that point right there, after that third hour close below the 38.2 is where my sell signal actually comes into play. Because unfortunately it didn't signal up here, but play it conservatively and stick to plan. And this is where the sell signal came in on the move on this long whip back up to the upside, kind of like this large hammer that looks like it's going to reverse to the upside, but it doesn't. So what happened is the next couple of days or a couple of hours went up but it wicked above that 38.2 from the previous level. So that was your support and resistance flip. It was support here, broke, and then came up as resistance. And then it started to work its way down. And then it actually broke the 35 722 level here, and then it went, and then on the third one below it, right about here, you get a full retracement opportunity from, you know, a lot of buyers at this level. If you were here and got stopped out, this is probably going to be the next spot you look. Got close there, popped back up, and then came back down and kind of hit this. So this is where my next buying was going to be looked at. But as this was happening, I wanted to go into the next time frame, going over to the 4 hour and seeing what was going on over here. And as this was coming down, the 4 hour actually clicked into the bear zone, which we haven't seen in a while. As you can see down here, we were in a bull zone for a long ass time. And then we finally got into a bear zone. So that was a big deal for what I look at, because I don't do a lot of trading off the hour, but I use it as a guide of where some of the other things could be headed. And then when you get into the 4 hour, it broke into the threshold here. And once it went down into this area in here, into the bear zone, this was a major time for me to say, okay, we're in the 4 hour bear zone. So that makes me, I'll come back to this chart, but what that does for me is it makes me look at the daily, because the daily is where I do a lot of my major buying. And when this went into a bear zone and working its way down to, you know, some of these horizontals, and I'm sure Saul will talk about some of these horizontals down in these areas. But the market dropped all the way down to this 30,100 here on Coinbase. But this was a major signal for me to look at the daily, and really it came at this. The main point that really caught my eye was the third 4 hour candle below this moving average, because that was when it came back up here and then came back down and closed. That was a major signal for me to, okay, this thing is ugly right now. So go to the daily. So and the interesting point on the daily, this is just absolutely beautiful to me, and it worked like a freaking charm, is my shallow fib from my threshold, which we're still in a bull zone, by the way, since we got into the market way back here at 10, on the long term, we haven't sold yet. I've actually added more to my position on this holding at the shallow fib level. I got filled, you know, a couple $100 above that point, but I'm still filled there and going to the upside, which is nice. So this is kind of like a nice little V recovery off of this, versus the last time it was trying different things on another 38.2% level was back in here. And when I look at the RSI, I kind of look at two different things here. Because like if you were following this from before, from when we started way back when, and you got to remember this fib level is off a threshold point. Nobody and their brother is putting the fib starting at that level. I mean, there might be a few maybe doing it off maybe the possible break of the moving average or something like that. But this threshold, so when you get up to this point right here, that went right down to the 38.2, and that was also another buying area that we had. So the interesting point is the RSI, even though it was still in the bullish zone, it dipped down in underneath where the bear zone is, but it has to get below the bull zone to actually classify it as a bearishness. So basically the top of the red zone here, the bear zone, and the bottom of the bull zone is kind of an area of consolidation. So when you look at this little lip and this little lip in here, it went into this little period of consolidation. So yeah, it bounced off the 38.2 and came back up, but then we were in this consolidation for a little bit, stayed bullish, and then took off from that point. So the thing that we're looking at right now is, now that we're up at this point and it went right down to the 38.2, and we got a little bit more of a sharp move up and down, or down and then back up, versus consolidation. is that we didn't dip below this red line into this area of consolidation. And we also didn't have a crossover. See, it tried to cross over here and it tried to cross over here, but it was in consolidation area for me, for what I look at. But this time it didn't. So it held there and then it didn't cross over. So to me, that gives me comfort that this might not be a bull trap. This is a little bit more of, okay, we hit the 38.2, right where a lot of buying interest should be, and we popped back up. We never broke below. I mean, we broke below the moving average here, but we never settled more than 3 days. It did wick here, you know, all that kind of jazz. But this moving average, along with the 38.2, has been a very strong support level for me for what I look at. So that's a, to me, when I look at my plan and this works the way it does, this just makes me happy. I mean, this is what's supposed to happen. So it's working pretty well. Going back to the 4 hour, a couple of patterns that I like on this that also makes me feel like we're not in a bull trap is, for one, we got back into the bull zone, for one, have not crossed over at all. I know the momentum's been dropping a little bit, but it's still very elevated to where it hasn't signaled enough for me to say bull trap just yet. Are we against resistance? Yeah, we're absolutely against resistance because, you know, just this trend line alone, just off of this, you can see where it's kind of hitting up in here. Basically, it's hitting the previous high of my previous threshold right here at about just underneath 40K. And it kind of hit it, and it's been testing it a couple times here. And we're at the current shallow fib, which I actually, when it dipped down into that shallow fib, I actually added a little bit more earlier today at that point off of this 4 hour. I got filled at 38.4 because I actually put it a little bit lower because on the hourly, the shallow fib on the hour was at 38.023. So I just kind of and this other fib extension level is at 38.3. So I just kind of picked a number right around in there because I felt like it was going to come down into this area. So I picked 38.4 and I got filled there again to add to position. But there's two patterns that I'm looking at here. One is this trend line break right here. If you take this distance of this trend when it broke at this point, and you know, kind of trickled out here a little bit and then popped up, the distance from that low to this trend line, from this break point to here, puts us right into this extension off of my threshold, right? So basically, if you took the middle about here, you're talking about what, about 43.2, maybe 43.3. I think that could be a good target to look for, and that's why I think we'll make new highs and push above this level and get into this first resistance point, and that's probably where I'll unload a little bit. And then also this longer trend line. So if this does end up breaking, we can actually put it here now. If this distance to this point, if it breaks, then the next level to the upside puts us pretty close to where the 227 would be. So you're looking between, you know, basically 50 and 52,000 as the move up. So it would make sense for me to pop up to this level, come back, hit support, and then pop up and take a nice run to the upside on this pattern. Now, of course, the fibs are in play at the moment. So of course, we're the 61.8%, and this trend line, this bullish trend line going to the upside. If this area breaks, or even this moving average as it inches up, this whole area in here is going to be an area to really watch, because I think if it breaks here, you know, you could probably get down into the low 30s again off this 4 hour. But right now, it's in the bull zone. No crossovers just yet. Can we consolidate in here more? Yes. Until I think we can probably break out to the upside on here. And given that is because this held really nicely on the daily, popped right off the shallow fib. And even if you go to further time frames, the bounce off the weekly didn't quite get to the 28.8. That's where my actual next buy was, by the way, and it never really got down there. So I was going to kind of get it at those two levels. Never got that fill, but it popped up, and to me, that's freaking bullish as crap when you look at a weekly like that, to pop off this shallow fib level and go back up. Now, we haven't made new highs yet, and of course, you do got to be concerned about the you know, what Joe was kind of talking about. But I feel like from the stuff that I look at, I don't quite see a lot of evidence to where it's a bull trap, but it still definitely could be for sure. And then another thing, just real quick, this is a mixture of extensions and fib trend extensions also. This is a messy chart, and actually Tone showed this on his show today because he was wondering where some of the fib targets were to the upside, and I look for confluence between different things, and the two levels that stick out to me right now is right around this level at 46K, and then also this level here at 56K. I don't know where the top will be, but between 46 and 56 right now, I think it could be a really, really good spot. And I'm hoping that when Saul shows his charts, maybe there's something that comes similar to that. I'm not sure. On Tone show, his MRI tops basically had pretty close to the same levels that I had, which is cool because I like when I'm looking at it from a wholly like a completely different way, and he's looking at it in a different way, and it's kind of, you know, coming together. So I'm hoping that Saul has some of the same things, and that would be pretty cool. Other than that, the dollar's going to zero. No, I'm just kidding. But the what else I got? The only other thing I was going to show on here, these fib extensions here are off of my threshold. What a lot of people are going to be looking at, which works as well, just as well, is taking the fib retracement just off the high. So if we do make new highs, this will be the first level that people will be looking at on extensions. And what I like is where this fib extension at the 200% right here matches the top of where the next fib extension would be, which, you know, if we break this trend line, this will be a target, which is just on the bottom of this 227. And then you got an extension that could go to the 200%, which is around that 53, 57 or 53,700. And that's where, when you look up into here, that 53,700 is kind of in the middle, or not quite the middle, but it's in this range that I really like as a possible move up to where I would take a lot more profit on this move. And then that's where that's where I think that maybe we can get a nice correction from that point. Not trying to pick the top, I'm just trying to pick ranges of where I feel like are good spots to kind of sell out some of these longs that have been bought in the past. So that's where I'm at. I bought the shallow fib today and let it ride. Questions, comments? I know I covered a lot here in different time frames. People's heads probably exploding. So you got anything, Saul? Or
no, I am, I think, following along pretty good. The main thing I've really been picking up from you is how you use the RSI to distinguish between these. This situation right here is the perfect example where it could easily be just a dead cat bounce that is going to just turn around and dump hard the other way, or it could be a very good buying opportunity before we make new highs or whatever the case may be. And using the RSI to distinguish between the strength of the bulls and the bears to help you understand when some of these little bounces are more bullish or bearish is something I've been really learning a lot from, and think that yeah, it's a big deal that the RSI is maintaining the bull zone, and it's also a very big deal that it bounced so sharply up to 38.2. It's one thing to go down there and test it, maybe get one close below, maybe two closes below, and then get some sort of reaction. But to come down and to wick off of it and get this sharp bounce, specifically like you were showing on the weekly, that weekly candle just looks very, very bullish. I mean, that's
insane. I mean, it's just insane.
When's the last time we find another weekly candle with a wick that big on bottom? I mean, we haven't closed yet, but if we do close green, that wick on the bottom of the candle, that's like, what is it? A $4,000 wick or something right now? I mean, it's
the low is 3,100, and we're at 39,479 at the moment.
What was the open?
Oh, the open? The open was 38,168.
So yeah, that's like a $7,000 wick
Yep.
on one weekly candle. What was yeah, just I mean the low wick, the very low after the capitulation. What was that wick like?
Which one are you talking?
In March, that capitulation dump, and
You talking about here?
yep. What was that wick looking like?
The high was 81.87 and the low was 38.58. So about
In the
5,000, yeah, 4 or 5,000 maybe.
what was the close?
The close was 53.45.
Okay, yeah, that's yeah. I mean, I can't think of another wick that I've seen that is like what we're looking at right now with Bitcoin, and
Yeah, it's insane.
there is reason for it as far as I'm concerned. What we started with at the top of the show was me talking about how important technicals are to me, except for in the very, very rare situation where fundamentals are even more important. And from what I've been hearing, not only are Trump and the supporters blocked and censored from YouTube and Twitter and these sorts of things, but they're also getting their payments censored. And from what I've been hearing, that like literally the only payment that they can accept is Bitcoin. And to me, that was why this whole thing was created, and it was something that I didn't think we would see such a need for it so early on, where big, powerful people in the world need Bitcoin because they're getting their payments censored by the powers that be. So, as far as I'm
that's
concerned,
one thing I love about it. It's just a great alternative. I mean, it just really is. I mean, it's just
it's the
phenomenal.
only alternative, and
Yeah.
that's so incredible. Is there's never been an alternative. Once the powers that be want to shut down your payment processing, you're done. I mean, you're done.
Yeah,
And
exactly.
now there is an actual alternative, and in my mind, this is way more bullish than money printing. They can print money till the end of the day, and we can all understand that that's very bullish for Bitcoin. But the fact that somebody like Donald Trump can only accept payments using Bitcoin, that is way more important to me than money printing or even halving, because it's urgent need for a scarce asset. And yeah, this is something that seeing this wick that we're seeing on the weekly candle, it's easy to kind of overlook or just kind of yeah, it's just another day. But find me another candle like that. I mean, that is a big deal.
Yeah, it's bullish in my eyes for sure. Couple other things real quick. I got when you talk about the RSI, because what I'm really trying to do is like trying to get myself in the psychology of what the market's thinking at this point in time. And to me, this was okay. The market went up, but it just didn't go anywhere and consolidated versus this. So to me, the psychology from when this happened last time to this time is just so different. And like you said, just what you're talking about alone brings so many more players in the market, probably a lot earlier than what the corrections are probably going to be smaller. Those kind of things. I mean, we did have a 30% correction. That's no joke. But that hold with the move that we had, that 30% correction and that hold there, to me just spews bullishness from what I follow. So, but there was a question from Bernoulli. He texted me over here. He was asking what percentage of correction are you expecting after new highs? I can just look at this chart here. I'm going to continue with my plan, and my plan is to keep continuing to move this fib to the upside, and just say, just for kicks and giggles, it gets to that 53,000 or whatever we were kind of talking about. The a 30% correction from that point, you're looking at basically the next shallow fib, which would be 37.6. Now, if it really gets ugly, 27.3 would bring us all the way down to almost a 50% correction, from that point. So this would majorly be my line in the sand, would be this 27.3. So what I would do to safeguard any crazy ass shit happening, if it gets up to this 54, what I would do is I would actually buy a $38,000 put and just protect myself over the next month. Because if this starts coming down and it wants to get really super nasty, it's going to cover my ass to 27.3 on that put, so I can buy that put back and save some of my stuff and keep my capital in sats versus that. I mean, that's just kind of the way I look at things and do things. But if you get to 54, I'm going to stick to the shallow fib. If it gets back down into this area, that's going to be my next buy spot, and keep this thing going to the upside if it wants to. Because as long as it keeps that 32%, that 38.2 on this trend, I ain't selling shit. I'm just not. I'm going to keep adding on every one of these. Because I mean, when you look back, I mean, it's each one of these highs. I mean, right there, it went down to the 14K. Went back up to right here. Went right down to the 16K. I mean, it went to made a new high there, but it didn't even make it down there. So it just consolidated and took off. The next one up right here, not even close. As you can tell, it was pretty freaking bullish. Right here, still bullish. Right here, we had a little bit of a wick down. Didn't make it to the 38.2. I didn't get filled there. I had orders, but it didn't get down far enough. It looked like it was going to break down, but back down into the bull zone, which would be a major sell signal. But kind of faked us out, which made that even more bullish, since it didn't even make it down to the 38.2 and popped up. And now we're sitting here, hit the 38.2, which is great. So I'm just going to keep doing that until this market tells me otherwise. I got to let the market be in control, because I sure as hell not. I got to let the market tell me what it wants to do, because I don't know where it's going. So you just kind of ride it that way. So hopefully that answered his question. So that's what I'm kind of looking at.
Yeah, it's a tough question to answer. If we make new highs, it'll all depend on how far it goes. If it
exactly.
makes a new high and goes to 42.5, then that wouldn't change much from where the current buy zones are. But if it makes new highs and smashes straight to 50,000, then that will really change things. And that's actually a really important point, is how the orders that you have, they should be dynamic in terms of if you're looking to buy a dip, then the further price goes away, further price goes up, the further your bids should be going up to buy the dip. Like, think about like most of these dips haven't been coming to where people have been looking to buy. The big 10,000, 14,000, 20,000 retests, the dips just continue to not go where people are wanting to buy. And in my opinion, that's because the pumps have gone further than would be generally expected, and having an ability to adjust the orders with the price movement is going to be really the only way to effectively buy dips, as far as I'm concerned. And the system that I use is based on moving averages. It kind of has that built in, because as the new candles print, the average will calculate, and if it's going up, then the averages start moving up, and then the area to enter continues to move up with the price. And same with Fibbo, is that the further that the price moves up, if it does make new highs, the further it moves up, the more he would continue to extend the fib, and the higher the 3.82 would continue to go. And I think that that's going to be one of the most important things outside of risk management and the stuff that everybody should know by now. One of the most important things to buying the dip is buying it at the prices you don't want to buy at. When it's too clear and too obvious to say buy a dip on a throwback to the retest, the all-time high where everybody's looking for it, it's often not going to get there. And if you're consistently on the one hand buying dips before they dip even further and getting stopped out or whatever, but on the other hand, if you're always too low with your bids and the price is never getting there, then that's also going to be a major problem. So I think that the way that you're able to trail your orders and identify the buying areas in real time based on the very recent price movement is what everybody should be learning, that as well as how you're able to identify the trends and the reversals with the RSI fib zone. So yeah, I think that right now it would all depend on how far the next move is able to get before being able to determine where that next correction would get to.
Yep. And all my timing shows if we do make a new high here, I like 46 and then I like 56. So if it gets to 46, that 38.2 is not going to move up too much, but that 56, it'll definitely get us up to a point where a nice 30% correction from there would be a nice 38.2 again to keep this thing going. And of course, if it breaks down, then we're out, you know. One of the main things I look for is on the daily. If the daily starts dipping into that bear zone, you know that we're up shit creek without a paddle. I mean, it's gonna sell off pretty freaking hard, and that's probably when the 50% move or the 60% move down to the downside would come into play. But until then, 30% corrections and consolidate for a while, and then do it again. I'm okay with that. We can do that the rest of the year.
Absolutely. And yeah, you brought up some other good points in that you're just going to continue to buy the dip until you have reason to do otherwise. And I think that's the other thing that can be so hard, is that when the price moves farther and faster than you are expecting, it becomes less and less attractive to buy a dip, and it becomes harder and harder to just keep going with the trend. And very few people that I have seen are, really have that ability, which tells me how hard it is to really, successfully buy dips and continue to follow the trend. So as you guys have been watching this and just think about where have you been taking profit? Where have you been really feeling like this is a sell? And where have you been really feeling like, this is a buy? And if you are finding it, hard to buy in bull markets, that's generally when it's a pretty good time to do so. So I think
I want to show you something real quick. So on that note that you're talking there, a lot of people get confused. I actually have two books, a short term and a long term. And the long term is been, basically, basically on the daily, all my long term stuff has come from here. And the buy at the 38.2 goes into my long term hold. Anytime it comes down to the 38.2 on the trend, I'm adding to my long term position that started back at this threshold. Now the other ones that we're doing, like when I buy this threshold here and we trade, that's in my short term book. It's really the main ones off the daily is where I add to positions and kind of press the positions on the trend. And then on the short term is where, you're getting in and out a lot more, and then hopefully creating dry powder to add to the long position. So a lot of times people will ask me that kind of question. So I just want to kind of clarify that. On the daily itself, when that hit that thing beautifully right there at 38.2, that was an add to my long term on that. So hopefully it kind of clarifies up a little bit. Just adding to what you're talking about.
Yeah, appreciate it. And before getting into my charts, we'll go ahead and share my answer to the question. The title of the show is Bitcoin a buy or a sell? And in my opinion, it's both, depending on what your time horizon is.
Yep.
And it's so critically important to understand your time horizon. It seems like a simple thing, but the longer I've been in this thing, I've realized that could be the single most important thing. Those that are working with like a 1 month time horizon or a 1 week time horizon, or you're watching the 15-minute chart, the 5-minute chart, and you're wanting to buy at 38K before it goes to 42K. If that's your time horizon, this is not the buy. This is the sell. This is where you should be taking your profit. If you're a swing trader or a short-term trader, like Joe was just talking about earlier, he's a day trader feeling uncomfortable about how long he has been in the long position that he is in. So that should tell you that he feels like he should have gotten out a day or two ago, but the price just keeps moving in his favor. So this is absolutely not where he's looking to buy. This is where he is very much looking to make sure that he protects the profit that he already has. Whereas if you have a time horizon of 1 year, 2 years, 3 years or plus, then it's always the time to buy. You dollar cost average and you buy every month, just like you would in your retirement account. In your retirement account, I'm assuming that most of you are having part of your check deducted before you get it, and then that gets put into a retirement account. This is how you invest for long-term situations. And I really, really believe that the people with the longer-term horizons are going to make the most money. The people that are having trouble wrapping their head around how much they're up over the last year or two are going to end up selling too soon and being on the outside. Whereas the ones that are really looking like, I want to leave Bitcoin as inheritance to my children, these are the people that I think are really going to be in the best spot. And again, what Joe was saying is there's a lot of money to be made in bull markets, and often the most money to be made is by doing absolutely nothing, especially if you have if you're not a trader and you don't trade day in and day out and have a system that you really trust, then you're going to behoove yourself to do less. The less that you do, the more that you will help yourself to succeed long term. So I think that it's just critically important to understand your time horizon, and it can get complicated listening to Fibbo talk about multiple time horizons if you don't have a very clear understanding of how much that impacts a trade. And so yeah, I would encourage everybody to take a close look at why did they get into this, and what was the time horizon that you had when you originally got in. When I established my HODL position, it was with a 10-year time horizon, nothing else. I didn't think about where the price got to XYZ, I'm going to buy this many Lambos or whatever. I'm in this for 10 years. If it goes to zero, I'm going to be able to live. And if I'm right, then it should be at a much higher price than I could ever imagine in 10 years. And 10 years in crypto is hard, very, 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 very hard. I certainly haven't gotten there myself, but to survive 10 years in crypto, you earn any penny that you're able to realize from the market. So having a very clear understanding of why you're investing in this market and what your time, how long you're investing in this market for, is going to really, really help you to sit on your hands during some of these scary, what could be these scarier short-term crashes that really are insignificant over the next, medium to long-term 1, 2, 3 years plus. So yeah, definitely appreciate you.
I mean, I'm glad you were saying that, because that's absolutely good stuff. I mean, people got to hear that more and more and more, because trading is not for everybody, for sure. And you have to get the right mindset of what you're in it for, and what you're saying needs to be told a lot more out there, for sure. So thank you for bringing that kind of stuff up, because I think a lot of people in the back of their minds are like, what in the hell am I doing? I don't know what I'm doing, that kind of thing. So those are very wise words.
Well, I appreciate it very much. And
coming from such a young, good-looking dude. No,
I'll tell you what. That's something I guess we'll have to talk about more for sure in the coming episodes, because everybody's heard risk management pound into their heads, and
no, this is more than that. This is way more than that. Risk management comes after you make that decision.
Absolutely right. Risk management is a function of time horizon, and that is so critical. Like for me, when I was originally investing, my risk management was I was okay with this going to zero, but that was only a function of the time horizon that I had. definitely think that this is a important topic to talk about more, especially as this bull run is coming around. I think that what you just said is very, very true, that a lot of people are kind of looking around and wondering, what the hell do I do? Deer in the headlights type of situation. Those are the people who are waiting around all bear market for another bull market. They're just thinking, all I got to do is hold through a bear market, and then I'll know exactly what to do the next bull run. And if you did learn from the last time around, and you really did make some moves to establish a very objective trading system, or to reinforce what you already had, then yes, this is the time. But if that's not how you're feeling, if you're not feeling 110% confident, like if you're not waking up in the morning feeling like, yes, this is what I am meant to do today, then I think that you would be best suited to buy and hold. Just buy and hold on, no matter what the price is. Hold on based on the time frame. The other thing that I talk about, and I will continue to talk about, is using a time target. After the halvings, we have seen very consistent patterns for tops occurring 15 to 18 months after the halving. And that is my current target right now, is 15 months after the halving. I don't know. I mean, price could be anywhere. It could be lower than we are now. It could be way higher than I could ever imagine. And having a time frame for when this market should be able to run till helps me. Like when we get these big moves like we just had, it helps me to think, okay, this is still early on in my expected time horizon for this current bull market. So
yeah, you actually said something, I don't know if I'm sure it was you on some show, that it's actually more difficult in a bull market than it is a bear market. Because in a bear market, you can just buy more on the way down. If you have a time horizon, you just dollar cost average on the way up, and wait for that bull market. But it's the bull market that I get way more questions of, when the hell do I get out? Like, when do I take the money so I don't lose it all, back down to where, that kind of thing. So I don't know if it was you. I think you might have said something like that, where it's just a lot tougher in a bull market, because a lot of people are like, in the back of their mind, they want to continue to ride it, of course, but where do you take profit to preserve that capital, and not have an 80% drop, and all of a sudden you're back down to where you were before, and then you didn't do anything. You didn't capture any of that. So I don't know if I'm saying it right, but I remember you saying, I think you said something like that. So maybe you can elaborate on it. If it was, I think it was you.
yeah, absolutely. That's something that I've really been coming to realize lately, was how much more emotional the bull markets are. In the bear markets, it seems like for the first maybe 20-25% of the bear market, people are very confident dip buyers, and they buy in, and then they watch the price go against them. Either they take the stop or they just hold through, and then they're done. And for the next 80% of the bear market, that's just kind of it. They're out of ammo, or whatever the case may be. Whereas once that bull market comes around, now it is a question of, am I really fully capitalizing on this? And the more the price goes up, the more people start to think about, should I buy more, or is this a spot that I should really sell? And like you said, after a while, the participants in the bear market just kind of got despondent, whereas now they're really anxious to
exactly.
know, is this a time to buy? Is this time to sell? And I think that, I don't know if that's common, if that's exclusive to crypto, in terms of people having so much belief throughout the bear market that they're not that afraid of the downside. Whereas once it really takes off, now they kind of get afraid of missing out on the upside that they just know is there, and they've been there before. And I think that this is the most important time for us to kind of be doing what we're doing. Whereas before, I thought it was the other way around. That in the bear market, it was the most important time.
Yeah, interesting. All right. Show us your wizardry. I want to see.
Show us some quick charts here. And all right. So first thing we've kind of been looking at for a little bit now is this Hyperwave Fractal. Was following it very closely on the 4-hour as it was coming together in a very textbook fashion, and was looking at this as a potential phase 4, which would then make this like a 5, 6, and look for a 7 further down. However, the trickiest part about hyperwaves is this situation right here. When you get overextended from the phase line, it's very hard to tell whether or not this is a new phase or if this is just an overextension from the prior phase. And that's where it can get subjective for sure, and definitely take a lot of just experience and trust in the process for how to identify the individual phases, because that's basically what's going to make all the difference. Is if this was a phase 4 move right here, then the following dip and bounce would be a 5, 6 and make this basically the perfect selling opportunity. However, I'm not seeing that. That's not my interpretation right now, due to the support that we found from the phase 3. So whenever this happens, when we get that overextension that looks like it could be establishing a new phase, what I pay close attention to is the following correction. If the following correction returns to this trend line and finds strong support, then that tells me this is just still only phase 3, and that phase 4 has yet to establish itself. And so that's why this.
And phase 4 is always higher than phase 3, correct? It's always a very large to the upside.
Correct. Yes,
Yeah.
Higher and at a steeper angle. Going to be more of a 90-degree type of angle. So, yeah, this.
So maybe the angle that we're on at the moment, hopefully.
Yes, quite potentially that this could be right here looking like a very good angle to establish phase 4. And if that does happen, then what we would look for is a similar return to what happened in phase 3 in about half of the time. So we're looking about 128% there in phase 3. And I have to keep zooming out if we were to do that. So if this was to establish a phase 4 here, which big if right now it's barely would even be penciled in, I would have to wait for new highs before I would even start to pencil it in. But as of now, it's going to be my interpretation based on the strong support that we saw from phase 3. So phase 3 here was currently is looking at about 31 bars. So we would say maybe 15 bars for maybe 15 and a half for phase 4, which would bring it to right here, which would give us 72,000 by January 28th of this month. And that is crazy to think about and hard to wrap our heads around at this point, but that's exactly what I would expect out of phase 4, is for it to take it to a price that is makes us all forget about how hard it was to buy back in here, and makes it seem like for sure up here is going to be the buy. And this isn't what I'm calling. Like I said, I would need to see.
Yeah, you're not. You said you aren't even penciling it in yet because you haven't even made a new high. So
exactly. Yep. Absolutely right. So not even penciling in yet, but am curious by what we're seeing out of this angle. And I will be continuing to pay close attention to see if, number one, if this continues to hold, then I'm going to be inclined to think that that next move is going to happen. If this trend line does give, then the target would become the prior trend line. So as long as this holds, I'm expecting new highs and I'm expecting acceleration.
If you come straight down from where the last candle is right now to that trend line, what is the price on that trend line? Not that one, the other one above it.
right here. Right here. This
Yeah.
line is right now coming in at 33,200.
Okay. All right.
And as long as that holds, I'll be looking for the acceleration. If that does give, then this trend line down here is going to be around 25, 26 or so.
Okay. No, that makes complete sense.
Um,
Yeah, my short-term average right now is right at about 32.5, I think, on 30% of what I would normally have on my short-term trades, because I'm not heavy on the percentage, just because of where we're sitting. But I'm 30% on the short-term buys on the way up here, where I'm averaging around 32 on that. So that to me is going to be a major line for me to watch, because if that breaks, I'm going to be out of my short-term positions and waiting for 25, 26. So that's one of the things I wanted to see, is how that was shaping up there.
Absolutely. I mean, yeah, it sounds like we're seeing things very similarly. Go ahead and pull up EMASAR to show you guys what I'm looking at for support zones and stop zones. Here, this last move, it kind of like Fibo was talking about, he had more bids set right below where the dip kind of ended up finding support. And here we see that it came very, very close to the 4-hour beach, to the buy zone that I absolutely had orders set at myself, and came up shy. So to me, this is a sign of front running, a sign of people getting more, just setting their bids higher and higher and higher to make sure that they get filled. And so many people potentially did that it didn't even return to the area of support that I would look for. Like on the previous moves, like this move here, it at least got that wick down, which makes all the difference in the world, especially if that's where your bids are set. And also because this is where most of the volume will come. When you get this big sell-off that finds a terminal point, it'll generally find a terminal point because so much selling pressure came right here and it just got overwhelmed by buys. So seeing that we have gotten a nice, correction on these last few, wick here, and then this one actually got a close inside, and then before the reaction, all the way back to the last time we came in, it actually moved all the way down into the ocean to kind of threaten the stop loss. But these major corrections that we've gotten recently came to that buy zone, whereas this time it appears to me that it got front ran, which is a major signal of strength, that the bulls are very much kind of piling in at the areas of support, so much so that they're not returning to where I would expect. That being said, this would be the area that I'm looking to trim and looking for some sort of correction. The two most likely things I would be looking for here is going to be basically what we saw last time when we got this similar sort of setup. Let's see what we got. Yeah, like this. Okay, so we have this nice move up, and then we get, this sharp sell-off, which is going to be, like nice 17% sell-off there. And then we get a nice bounce where it moves and even takes out these highs before getting a strong little kind of correction back into the meat of this V sort of bottom, but then higher low take off. So that's what I am seeing here, is that there should be a good amount of resistance from here to here, and that even if it does kind of peek its head above the highs, I'm very much going to be expecting a return to this area. So we have our support going to be about here. Let's go make that green, and the low end would be here. So I do have bids currently entered right in here, and with a stop down in here. If it does reject these highs and take out this low, now I'm really looking for a return to the 25, 26 area. But as it stands, I am seeing a lot of strength from here. Like if we just take the fibs, that if it really was going to continue to the downside right in here, like the 61.8% or so, is kind of where you would expect that to happen. Whereas now it's pushed all the way through and it's showing a good amount of strength. And this is where I could see it just taking off to new highs, kind of that phase 4 that I was showing originally. But I'm more expecting some sort of consolidation range before that happens. And here we see a good chance for that sort of situation to happen in a little bit of a bigger way. We're back in here, we dump off, kind of create that new high, but then if you had a trend line from this low to that low, it's kind of around where we came into. So looking at either something like that or even something like that, this gets a little too steep. So this is where I am thinking either we take off and establish a phase 4 and really just mash through highs and really accelerate in a big way, or we consolidate into some sort of bullish pattern before really taking off and establishing those new highs. And I'm really inclined to think that it's the former, based on what we're seeing with the current proof of the value for Bitcoin. I mean, nobody right now is asking, what can I use Bitcoin for? Or nobody's really saying blockchain, not Bitcoin. It's more people realizing how much the system can control or limit your ability to operate, and seeing what else there is out there as an alternative. And it's not Ethereum. I mean, it's not gold. It's Bitcoin, and the proof of use case out of Bitcoin is going to, in my opinion, do much more than just people hoping to, get rich quick during a quick bull market. And that's really what's going to cause this thing to accelerate in a bigger way. So I guess the last thing.
Wait, go back a second to that chart.
You got it. Was that the daily? Yep.
As long as it stays in that triangle that you have built there, does it remain phase 3 as long as it stays above that lower trend line?
Great question. I would say that
it's more that one.
Yeah, as long as it stays above this trend line. And it could wick below. So say we kind of have some wicks below here, and then the top resistance there. So yeah, for me, it would have to hold this trend line for it to stay phase 3, and I could still see it building a nice triangle in there for sure.
And then explode to a 4, possibly.
Absolutely, and that would be the perfect recipe to explode to a new phase. Is that nice consolidation occurring after a good run. You really consolidate and hold those prices and levels, and then you're in the perfect spot. Yeah.
Okay, no, that makes sense. Yeah, and me being a student of the EMASAR, when you had the 4-hour EMASAR up there, my first glance is that it's pretty bullish. Like when I first look at it, it looks bullish to me. Yes, it's getting close into an area where you would trim once it got up there a little bit more, but when I first take a glance at it, it looks pretty freaking bullish to me. I don't know if I'm looking at it right because I'm a kind of a new student at it, but I'm getting it more and more as I get through it. But so at first glance, does it look bullish to you? Is maybe what I'm asking you.
Absolutely, as bullish as it really could be, being that this dip came down and failed to even retest this moving average. So whenever we break,
that's the first thing I see. Yeah, for sure.
Absolutely. So whenever we break down the 50, I have a high confident target of a return to the 200, and it'll continue to support the 50 until it doesn't. And then when it doesn't, that's when I expect a sharp return to the 200. And this is a spot where everything was lined up for it to happen, and it was moving. I mean, there's no reason why it shouldn't have gotten here from how
but the next spot to me that makes it even more bullish is when it didn't reach the bottom and then it rallied up to the 50 or the green line there in the middle, and then it dropped, and then that's where it held, and then it went up. To me, that's the bullishness, because if you drew a fib from that low to that high, I'm sure it hit a pretty good level. I mean, I'm guessing, but to me, that's where it's bullish to me, because it didn't hit the beach, and then when it came down, it didn't break the fib level there, and then it went back above the 50, and that to me just screams bullishness from the way I interpret things. But
absolutely. And that is something I was paying very close attention to over the last 24 or 48 hours or so, are these fib levels. Thanks to what I've kind of learned from you, is let's start first of all on the bounce. I mentioned that if you're going to kind of continue to the downside, that this is the area where you would expect it to resist below 0.618, maybe we'll close above or 2, but not 3. So here, it really looked like, okay, maybe it's ready to continue to the downside after it found some resistance here. But then on this move, what happened was that this little leg supported the 382 to 618 kind of little shallow fib buy zone. So if we move it over to this leg, we see that as it's coming down and correcting and looking like maybe it's ready to create new lows, this is showing us, there's actually some really strong support here between the 382 and the 618. And that it was actually where I was buying a little bit myself, as I missed out on the beach orders that didn't get filled. I think it's very important to have some backup, entries to help you maybe get into some of those positions that your original spot missed out on. So as I missed out on those bids, I was very, very much buying in here and seeing this as a good sign of strength, and kind of starting to look at the potential for a big W pattern, something like that. And that so far is looking like it's playing out pretty well. And again, this is where the trimming opportunities are. This is where I'm looking to, if I take 20% off of the table here and I set a stop loss at break even, now I'm in a spot where I'm gonna make money pretty much either way. If it dumps against me and I get stopped out, well, I just made a little bit. And if it takes off, well, I'm not gonna be sitting here wishing I didn't trim 20% because I'm so much, frothing at the mouth that I want more exposure. No, I'm gonna be feeling super happy that I've set.
Hey, can I show you something real quick? Can I share screen? I want to. What I did was, when I was looking at the EMASAR and it was making that kind of pattern, this is what I was working on here. This is on the hourly though, but it was more, I was just kind of trying to get a feel for it, because you got the fib level here, which was my threshold, and then it worked its way down, and then this 61.8% level here is kind of what you were talking about, where it kind of comes up like this. And then this move to the downside right here had another 61.8% level here, which created this move, this little bit in here. So I have a different moving average on here, but it kind of waited until it broke above that moving average. But two things is I had this little bit of a triangle looking thing in here, to where once it broke, this was my first target, which it kind of consolidated in here. And then I took this move right here just to get a fib trend on it. First of all, the first one came at the low point right here, which is this little area consolidation. So profit was taken somewhere in this area. but then as it broke above here, came back down and tested, it got up to the 2 right here as your next level. And to me, this 2 is pretty close to what you're looking at on your trim of at the top of that move. And now when it works back, this level in here, along with basically it's this whole stretch in here, all the way down to the 61.8% level from before. This whole area in here, if this comes down, this would be a spot to hold here as it works to the upside. So I was working on this as I was looking at the EMASAR because I was trying to see if there was any kind of fib action going on within that little bit of movement. And that's what I came up with. And it worked out pretty well. And that's why, to me, this is pretty bullish in the way this is setting up structure. And then the bottom part here, this trend right here, where the intersection of here, this is going to be my spot to really watch. So I'll buy here. Then if it breaks, the moving average and all this area would probably be my quick stop if I'm doing some short-term stuff. But I just wanted to share that with you because I was using the EMASAR and then I went to my stuff and kind of tried to compare the two. So that's what I was kind of looking at. So I just want to share that with you.
Beautiful. I sure appreciate it. One more chart that's come to my mind that I want to share real quick here.
Just letting you know, I'm still looking at your EMASAR. That's what it really boiled down to. No, I mean, I'm just learning it because it's so new to me. I'm still trying to figure it all out,
Yes, absolutely. And, I'm glad to hear that you're still taking a look at that at some important times. So something that we have been keeping an eye on this channel for a while now throughout this section here, and haven't really had a need to look at it recently because it's one of those longer term things that will only become important every now and again. And the main things I pay attention to here are the bottom support line, the median, and then the top resistance line. And this kind of helps to give me an idea for where we could potentially be at in the current market cycle. Notice how last time we got this nice rally, we did find resistance almost perfectly at that median. And here we have approached it and tested it and found some resistance there to pull back. This candle pulled all the way back to 28. And now this candle pulled back to 30, but held that low significantly. This looks like potentially the median of this could be getting ready to break. And those of you that use channels or are familiar with them, the targets are all going to be based on the support resistance and the median. When you're at support, the target is the median, and if it is able to break through, then the target becomes the top, whereas if it resists, then the target is back towards the bottom. So if it resists the median, then the target kind of becomes back towards the bottom around maybe 20K or so. Whereas if it can actually break through, and this is where I really like, using multiple closes like Fibbo talks about here. We have one close, maybe we can get another. If we can get 3 closes above this thing, it would really start to appear that it has been broken. And that would be the time where I would start to look at a target of the top of this channel. And I would just do that by kind of just drawing an average rise over run and seeing where that came in. Which, like right there, you could see that's kind of in the average of this move. And that would be up around 100,000 by May of 2021, which sounds great and all, but the reality is that the quicker we go up and approach the top of this channel, the smaller the price is. Like, for example, if we take a few years to get up here, the price gets up to like 150 or so. Whereas if we just shoot straight there, it's around 100 or so. And that's where kind of like we were talking about earlier with the dips, should be, you should progress your bids as the price goes higher and higher. If often your old bids should be adjusted accordingly based on moving averages, fibs, or whatever the case may be. Well, in a similar vein, the quicker we go up here, the more my price target would kind of be adjusted to the downside. So something to keep definitely close in mind here is to see if we are able to maintain support above the median of this channel. And if not, then the target is very much down here. But if so, target kind of becomes up in there. So the best thing I could compare this to is kind of looking back in here. And anybody that's watched me on Tone's show over the last week or so, I had multiple discussions about how both of us kind of believe that this is more 2013 than 2017. And there's a number of reasons.
I completely agree with that.
I'm glad to hear it. Yeah, because there's a number of reasons why I think that is the case, primarily fundamental reasons. And then, yeah, we could go on about that. But it's interesting that this one was able to kind of smash right through and then stall a little bit without returning back down to this, and then eventually accelerating to the upside. And that is, kind of what I'm seeing here is, this sharp move with just nothing but weekly green candles up into here, potentially getting above, and then consolidating into some sort of, bull flag triangle situation. This is what I'm looking for here. As we talked about potential phase 4 coming up into this area, 50, 60, 60K, 60, 70K or so, wicking up into here and then getting a sharp reaction back down below this median, like we saw kind of on that candle and before and after. That's really what I am preparing for and going to be keeping in the front of my mind myself. But I'm also going to just be letting the chart tell me what it's doing. As Fibbo says, as we've said many times, we just don't know. And the bottom line is we're going to be doing our best to bet with the trend and to stay positioned in the direction of the trend and to give ourselves sort of some mental map, some mental idea of where we may be at within said trend to help maybe understand position sizing versus trimming and taking profit and that sort of thing. But always having a clear understanding of how that map needs to change as the price does anything that is outside of said roadmap. So that is everything I was wanting to go over, and certainly lasted longer than expected, but I think that there was plenty of good stuff to talk about, and glad that you were able to stick around with me and that we had the time to share all of what we had on our mind. So yeah, another good show, and appreciate your time. Anything else that you'd like to share before signing off?
No, I think everything was good. And, even though we went a couple hours, I think there's a lot of good stuff in here. So I don't mind going long when we're putting out good content. And I'll see you at 46,000.
Well, cheers to that. I think that I will be
not financial advice. I'm just saying I'll see you at 46,000.
Be ready for that. By this time next week.
yeah, exactly. Sometime between now and our next show, 46K, I call it.
I love it. And before signing off, the question to respond to.
Oh yeah, I forgot about that.
Nice tip. Some Mexican dollars at the top of the hour, which
which is great. Pesos is on fire.
Yeah, that's way better than the US dollars as far as I'm concerned. And I can't remember what asset he was referring to, but essentially his question was that there was a coin trading for like $4.20 on Binance while it was trading for $3.20 everywhere else. And just kind of asking what the situation was there, and just wanted to respond by saying that that is something that can and will happen in highly volatile markets. When the markets really get moving, there can be a thin order book on one exchange where some market makers just decide that they're going to eat right through it and get to basically sell it, 20-30% higher than anywhere else in the world. And if you're in a situation where you're seeing a price of current assets, 10% below something else that you see on another exchange, be very, very, very careful about doing anything about it unless you have a lot of experience there. There are definitely going to be hedging arbitrage opportunities, as there were last time around. There was a 10-15% spread on Bitcoin across different exchanges in 2017 when things got really emotional and really volatile, and there were people that made a ton of money arbing that out, whereas there were also people that lost a lot of money by either buying on the exchange that was too high or thinking that they were going to get a nice arbitrage and then learning a tough lesson. So I would definitely encourage everybody to do their best to, of course, always manage risk, but to just understand what it is that you're investing in. And if you are looking to buy into something that doesn't seem like it is fairly priced based on the other exchanges you're looking at, give that a very close second thought. And if you're seeing a good opportunity to maybe make a quick buck on an arbitrage trade, make sure that you fully understand that, because generally in those situations the blockchain is going to be clogged up. It's going to take multiple hours to get that exchange through, get that transfer through, and by the time that happens, the premium is all gone. So that is definitely something to be aware of. And thanks again for tipping us those valuable pesos while the U.S. dollar is in the middle of crashing. So thanks again for everybody tuning in, and thank you, Fibbo, for your time. Thank you, Joe, for giving us your input, and we will look forward to catching up with you guys next week. Oh, last thing to mention, as I'm realizing I'm not having where to close out the stream pulled up. As we were at the top of the show, I was talking about some conspiracy theory type of stuff and censorship and all that, and then boom, my power goes out. I'm just sitting here looking around.
Great timing.
Yeah, I mean,
looking for the FBI rage. Like, they're coming for me.
Seriously, that was quite the timing. So that has left me here without really knowing, having the screen up to close down the stream. So I am doing my best to find that. And as I am working through, I will, I guess I'll just have to close down Zoom. So that's how we'll end it, is I will say goodbye to Fibbo as I'm saying goodbye to everybody else. And I'll go ahead and shut down the stream. And thank you all for tuning in, and we'll catch you next time.
All right.